What's up, YouTube? In today's video, we're going to be breaking down one of the biggest, if not the biggest, tax saving and wealth building hack that you are probably missing out on if you're a small business owner doing over six figures or multiple six figures in annual profits. And today's video is going to be really important for you if you're in a situation where you're successful with your business, but one of your biggest obstacles right now with your money is trying to save more on tax. As a business owner, there's tons of things that are available to you that's not available to W-2 employees. And what we're going to be talking about today specifically, small business retirement plans, is one of those things. Before we dive in, quick intro if you don't know who I am. My name is Jose Hernandez. I have an online financial education company that serves first generation wealth builders, people like you and me. They're the first person in their family to start investing or think about investing, and my mission is to help you learn how to reach your goal of financial freedom and or build generational wealth for your family. Started my career off in the wealth management industry as a financial advisor, where I earned my Series 7 and 66 licenses, working with wealthy individuals, receiving mentorship from some of the top financial advisors in the country, and eventually branched off and decided to start sharing everything that I've learned hands-on every single day on the internet with people like you. So let's dive into today's video, which is again a massive tax saving and wealth building opportunity if you are a small business owner, specifically if you're doing over six figures or multiple six figures in annual profits. And we're going to be breaking down small business retirement plans together. So this is going to be broken up into three sections, this video is. We're going to cover what small business retirement plans are. We're going to discuss how small business retirement plans can actually help you save money on tax. So stick around because we're going to actually look at some figures for you to actually work with. And then we're going to talk about what to consider before setting up a small business retirement plan, because this is a big decision for you personally and your business. And I want to make sure that you understand how to think about this correctly. So let's start off with section one. What is a small business retirement plan? So a common myth that I see when speaking with and working with business owners is the idea that because you're a business owner, you don't have access to something like a 401k or retirement plan that you would have access to if you were a W-2 employee somewhere else. And that's simply not true. Actually, as a business owner, you have the ability to set up your own business retirement plan, your own 401k or similar type of retirement plan that can help you not only fund your own retirement, but also help you save thousands, if not tens of thousands of dollars, if not more, in tax, right? So it's very similar to a retirement plan that you can have access to if you were a W-2 employee working for somebody else. But in this case, you're setting it up for yourself and or your own employees as well. And one of the biggest things that we'll talk about these plans is they can help you save a ton of money on tax, especially if you're in a situation where you're doing really well for yourself and now taxes are just a massive pain in the you know what. And of course, these are investment accounts. So not only do they help you save money in the current in right now, they also help you build lots of wealth for the future, because there may be a time where even if you enjoy what you do for a living in your business, maybe you want to step away from it or have the option to step away from it, and building assets outside of your business is extremely important. So it's really kind of a win-win. It helps you save money on taxes now if you do it correctly, and also helps you build lots of wealth for the future. So some quick examples before we dive into some numbers here, some examples that you may or may not have heard of when it comes to these small business retirement plans, things like the SEP IRA, the solo 401k, the simple IRA, the 401k as well. You can set up a 401k for yourself and your employees also. But just to get the idea a lot more clear in your mind, these are some of the options, not all. There's lots of other ones that you can consider as well. I want to keep today's video at least somewhat high level so I don't lose you in too many details. But again, some examples of business retirement plans that you can set up for your company are things like the SEP IRA, the solo 401k if you're self-employed and a single person in the business, simple IRA, 401k, and more. So now let's keep it moving here and let's talk about how these small business retirement plans actually help you save money on tax, because I'm assuming that's why you're here. So it all depends, of course, on how your business is set up. But in a lot of cases that I've seen and working with clients and students, if it's something like a LLC or something similar, your business is structured as what's called a pass-through entity. So in plain English, if you don't already know this, your business itself doesn't actually pay taxes. So what happens is you go through the course of the year doing business, hopefully making a profit, and then those profits and or losses do what's called flow through to your personal tax return. So the idea here is if you set up a small business retirement plan, in a lot of cases, the contributions or the money that you put into the plan from the business side, if the business makes the contribution, that can lower the amount that you're having to report in terms of gross profit for the year for your business. And of course, those gross profits flow over to your personal tax return. So all else being equal, you reporting a lower amount of profit should in turn equal you having to pay a lower amount in tax, even though you actually had a much higher level of profit than what you're showing. So in other words, in simpler terms, it's basically like an extra write-off that you can use as a business owner. And again, a lot of this depends on how your business is set up. It depends on how the business retirement plan is set up as well. But generally, any contributions that you make to the plan, if they're pre-tax contributions like a traditional 401k or SEP IRA, for example, that money is deductible. And the smaller amount that we are having to report on our personal tax return, the more money that's going to save us on our personal tax return. So again, lower gross profit that we're reporting generally means lower tax bill in our personal tax return. And also, again, this depends on the type of plan that you set up, but there are situations for example, let's say that you set up your business to be taxed as an S corp. So you're paying yourself a reasonable salary, which of course helps you save money on self-employment tax. But in any case, let's say you have a solo 401k, you're a self-employed individual, one person in the business, you're paying yourself a salary, and you set up that solo 401k to where you're making pre-tax contributions from the salary that you pay yourself through payroll. So that's going to lower the amount that you're reporting in terms of the actual salary that you earned in the year. And then let's say that you set up the solo 401k to also provide matching contributions on top of the money that you put into the plan from your money. So basically there's two levels, there's two levels of deductions that's happening here. You're deducting the money that you earned from the salary that you paid yourself, and then also you're deducting money from the business side, the money that was being contributed into the plan on your behalf based off of the matching that you set up in the plan. So that's just one example of how this can work and what it can look like. We're going to look at a much clearer example here in just 1 second, but I wanted to give you a high level understanding of what that could look like. So bear with me here. And we're going to take a look at some numbers. And I'm going to keep this at a very high level. Again, I know this can be super intensive with all the numbers, but I want you to follow me here so you actually understand how impactful this can be in terms of saving tax right now. So let's look at a simple example together. Let's say that you're self-employed and you have a gross profit of $276,000 in the year. So when you take your revenue minus costs of doing business, the bottom line pre-tax is $276,000. So all else being equal, that amount would flow through to your personal tax return, and that's more or less the amount that you'd have to start paying taxes on, right? Obviously, we have deductions and stuff that happens past that, but $276,000 is the bottom line from the business. Now let's say that you decide to set up and max out a SEP IRA for the business. So SEP IRA is one of the more simple types of business retirement plans that you can set up. They're one of the more flexible. They don't require you to fund them every single year. And a lot of people start with the SEP IRA before they graduate into like the 401k, for example. But let's say that you max out that SEP IRA with $69,000. What I want to do is show you the difference in the amount of tax that you're going to have to pay with and without that $69,000 that you contributed to the SEP IRA. So in this case, we're going to, again, use just very basic, rough back of the napkin math here. But when we take into account that initial profit of $276,000 and subtract $69,000 from that as a deduction, our new taxable income before the standard deduction, that is $207,000. So let's take a look at the impact that the actual $69,000 contribution made from the business to that SEP IRA actually has on your personal tax return. So as we're looking at the numbers here together, basically the way it works out is your total federal income tax bill after the SEP IRA contribution comes out to $40,607. So $40,607 in federal income tax is your tax bill on that gross profit amount that we looked at just a second ago, again, assuming that we make that $69,000 contribution to the SEP IRA. Now let's take a look at what our tax bill would be without that $69,000 contribution to the SEP IRA. So again, in this case, we're looking at that $276,000. We only have the standard deduction to take from that. So really we have $262,150 in taxable income. And a rough estimation of what your federal income tax bill on that amount would be is around $63,099.60. So what this means is your tax bill without the SEP IRA contribution, your federal income tax bill, that is, was around $63,099. Your federal income tax bill with the SEP IRA contributions, because again, we were able to deduct the money that we put into the SEP IRA from the business's profits, which again flows through to our personal tax return. Your federal income tax bill with the SEP IRA contribution is around $40,607. So what this means is that decision to max out the SEP IRA actually, in this case, again, using just ballpark numbers, saved you over $22,492. Are you seeing how impactful this can be? That's $22,492 that you're saving in federal income tax. And of course, the more that you do this, the more that tax saving continues to build up. And remember, this is an investment account. So that money can be invested, can compound, can grow on a tax-deferred basis, and can help you fund your future retirement as well. So hopefully you're seeing how this can be a massive deal if you are a business owner, and how it can be a massive, massive value add for yourself and your personal tax picture as well. So now let's quickly cover section 3, which is what to consider before you set up a small business retirement plan. Because again, like I said, this is a big decision, both for yourself personally and also for the business. And there's a lot of things that you need to be able to think about clearly before you take that next step. Number one is we need to understand that each plan type has its own unique pros and cons and rules as to how they work, right? So some plans are simpler than others to set up. Some are more complex. Some have higher contribution limits. There's all sorts of intricacies that come into setting up this type of plan for your business, and you need to be educated before you take that next step, because if you set up the wrong type of plan, it can cause massive headaches down the road, and I want you to avoid that. Of course, different types of plans have different types of requirements to stay in compliance with the IRS. So for example, the qualified plans like the 401ks, for example, they have a lot more requirements for you to keep that plan. Sorry, my wife just got home, so my dogs are about to go crazy. Different types of plans have different types of requirements in order for them to continue to be basically in line, in force, in compliance with the IRS. So the IRS doesn't come in and say, hey, this plan is out of compliance, we need to shut this thing down, right? So with the 401ks, there's a lot more requirements in terms of compliance, in terms of record keeping. Sometimes there needs to be what's called a third-party administrator. So some plans are a lot more complex than others to set up and maintain. And of course, different types of plans have different rules around funding requirements. So for example, the 401k typically requires you to consistently put money into it, is the simplest way of putting this, in order for that plan to stay in compliance with the IRS. Whereas other types of plans like the SEP IRA are a lot more flexible. So maybe your cash flow from a business perspective is variable year over year. Maybe you have a year where cash flow is really good and you do have extra money to invest outside of the business to save money on tax. You can fund the SEP IRA that year. But maybe the next year, it's more of a rocky year from a business cash flow perspective, and maybe it doesn't make as much sense to contribute to the SEP IRA. You don't have to contribute to it that year if you don't want to. So keep in mind, different types of plans have different requirements or rules as to funding them to keep them in compliance with the IRS. Also, different types of plans have different types of rules as to who can participate in the plan. So certain types of plans require you basically to make the plan available to certain employees once they hit certain requirements like age and how long they've been working for the company, and hours worked, and if they're full-time or part-time, things like that. So that's really important for you to consider as well. Different plans also vary in who makes the contribution or puts the money into the plan as well. So for example, with the SEP IRA, that account is always only funded from the business, from the employer side. Whereas things like the 401k can be funded by both the individual, and again, my dogs are going crazy, so I apologize. The 401k can be funded by both the individual, so in this case you, and then also the company can set up matching contributions into the plan as well. So different types of plans have different types of rules as to who puts the money into the account. Really important for you to understand in advance. Different types of plans, of course, have different types of costs associated with setting them up. Certain plans are a lot simpler and cheaper to establish and keep running. Again, the SEP IRA is one of those examples. Really simple, really inexpensive. Whereas other plans have much more higher costs associated with them. Usually the 401ks are a lot more involved. Sometimes there's third-party administrator fees, there's record-keeping fees, there's plan fees. So you really need to understand your options before you set that up. And then, like I said, some plans are a lot more complicated than others to set up and maintain. A lot of this comes back to, like many things in your investing and personal finances, your personal tax picture and also your personal preferences. But with small business retirement plans in particular, it can also come back to your business objectives as a business owner and understanding how this business retirement plan fits into your overall business plan as well, because it can be a very key part of your operations and the growth of your business as well. Because, and I've seen this working with clients and students as well, certain types of plans can be used as an incentive to attract and retain key talent employees. So, for example, let's say that you're interviewing somebody for a position in your company, and they're also looking at another position that's very similar with a competitor or a different type of business. Your company offers them a 401k with a match and pays them a certain salary. The other competitor pays them the same salary, the same role, same description, all the other stuff. However, they don't offer a 401k with matching, unlike you do. So all things being considered and all things being equal, there's a good chance that you might win that potential employee over that competitor simply because you have this benefit of the 401k and the 401k match as well. So that's one example of how this can not only benefit you from a business, from a personal perspective and tax perspective, it can also benefit your business in terms of retaining and attracting key talent employees to your operation. And the last thing I'll leave you with here before we wrap up is, like I said, this is a big decision. And with all the clients and students that I work with that are business owners that we're having these conversations with, I do my best to guide them and educate them on the options and what potentially makes the most sense for them. But I always make sure to bring in and loop in their CPA as well to get their final blessing, because there are a lot of intricacies that come with these types of plans. There's a lot of small tax things that you need to be aware of. And at the end of the day, certain things need to get the final blessing from the CPA. So that, in a nutshell, is what small business retirement plans are. Hopefully you're seeing now how this can be a very powerful vehicle, not just for your business, but for yourself from both a wealth building and tax savings perspective. If you're still watching this video and you are a business owner doing six figures or multiple six figures or more in gross annual profit, and you need to learn how to do this correctly, and you need help figuring out your financial situation in general, and you want to make sure that you're doing enough to reach your future financial goals, and you have that confidence that you're looking for in your finances altogether, what you can do is, in the description to this video, there's a link to schedule a one-on-one meeting with me. We can sit down, have a conversation more around your goals, and we can have a further conversation around how I can help and point you in the right direction. So again, the link to that, to schedule that one-on-one with me, is in the description to this video. But that's going to be all for me in this video. I hope you found this helpful. If you did, make sure you give this video a like, leave a comment down below, subscribe to the channel, and I'll see you in the next one. Thanks.